I can see why you don't want to leave your screen. It's just you move and it's down 10%, up 10%.
Hey Russell, what's your turnover in a given year in your portfolio?
I don't. It's more like if you have do you have a short book?
No.
Yeah.
I'm starting a hedge fund, but I don't have it yet.
Yeah. So it's the longs are fine. It's trying to manage their shorts and
that's
make
tough.
sure they don't blow you up. These moves can be quite extreme. So it's just hard. Like I feel like you have the first setup of the morning, and then like 10 o'clock, everything changes, right? So you start off weak, and then they rally them.
So you don't have a terminal short. Even if you're spot on an idea and you think the company's garbage, you're going to cover that short as soon as you got a problem.
No, I'm probably, my holding period is longer on shorts than it is on longs.
Oh, interesting. Okay.
On the terminal shorts, I agree with you, Russell. But if you're playing for an event, sometimes that's tough. But my experience is a really good short usually goes 30% against me first, and that's hard to hold.
You have to prepare for them to go at least 50.
Do you do that now?
I'm sorry, what?
Do you do that now? Do you shorten your book?
I do. I've been shorting the theme that I've been espousing, and that is things that need to be financed are going to disappoint. And my main play has been around housing and housing-related products like Masco, Mohawk, Builder's Source. Those names have worked for me. There was one Russell mentioned this morning I wasn't aware of. Russell, what was that?
Genweld.
Genweld.
Makes windows for new construction.
And then D.R. Horton and Lennar, the two big players there. I just think that either you're going to miss your unit sales volumes or your gross margins are going to disappoint. And that's what's been playing out. The gross margins are disappointing because these guys are having to offer incentives to get unit sales volume.
Yeah.
And so that theme has worked on the short side. The trouble is you have to be there before the event because when these things do disappoint, they're down 15% in a day. And being there before the event, exposes you to getting squeezed in markets that are still got a lot of liquidity sloshing around. But it's not to manage that risk. Russell, you and I had a discussion, I think, on Builder's Source back in August, and you said you wanted to buy it, and you were right in terms of the first, or I should say in terms of the next 2 or 3 or 4 weeks, but then it crash landed here in September.
It's just the market structure there is super interesting for them. So it gets whipped around near term, but like longer term, it's like they're just in a great position. Just a consolidated industry, and you have Brad Jacobs coming into building products, wanting to consolidate it as well. And you just can't travel that far to buy building products. So we'll see. I mean, near term it's going to be super bumpy, but
everyone is betting on household formation outstripping housing, and the statistics are there to support that. I just think affordability is just off the charts, and something has to adjust in order for the two places.
But it's interesting, right? Because you leave California, and a 1,500 square foot house is $1.5 million, and you move to Florida and you buy twice the square foot at half the price. So there is a lot of shift going on with people moving.
Yeah, but in terms of foreclosures, Texas and Florida are now showing up as the biggest states for foreclosures. I think that has a lot to do with the buying during the pandemic and people overreach.
Yes.
But we were talking about there was a good article in Bloomberg 2 days ago about upper middle income buyers of cars now having trouble affording cars, and the problem is they leased a car 3 years ago when rates were near zero. They're having to see their lease rates double nowadays for a $50,000 car, so it's getting tough even for the upper middle income to lease or buy a new car.
$3,000 down, you can buy it. You can lease a Tesla 3 or Y for $250 a month.
Anyway, It's getting tough.
Speaking of that, before we start, I just saw that Carvana's at 230 or 225.
Yes.
Unbelievable.
Huge
$4
move.
stock turned to 230. What a move.
I bought
Okay.
it at 6 and sold it at 20.
The logic there is that if you can't buy a new car, you're going to go to used cars, and that's where the AutoNation's CarMax and Carvana's benefit, taking share. Even if car sales come in at 15.5 million, which is below what people consider norm, 17 million.
Aren't those guys cheating on their financial accounting?
Well, I think they are.
I guess nobody cares about that, right?
There's so much shadiness there, but who cares? That's ultimately why shorting low price stocks with tons of leverage is a dangerous game. You might end up being right, but the stock went from 4 to 230 while you were waiting to be right. All right.
Are you buying Tesla for a Trump trade?
No. I'm not. That's not what I'm doing. All right, let's get started. Welcome to Wall Street Beats. It's Election Tuesday. I'm your moderator, Ben Brey. Today I have the professor, Paul Meeks, Charlie Peabody, our bank guy, and our resident short seller who loves pain, Russell Young. All right, since it's Election Tuesday, we should naturally just talk about a South American e-commerce company. Paul, what do you got from Mercado Libre?
Yeah, so Ben, thanks for quarterbacking today. It's great. We'll try to put some points on the board for you with our offense. So we have a bunch of tech companies, not the blitzkrieg we had last week, but a few tech companies that are of note reporting. And I'll get to the background first, and I'll get into my buddies down in Uruguay. So Russell will probably also weigh in on this, but we got Supermicro giving us an update. And why do you think they give us an update on Election Day? Because they're hiding. And we'll see what happens. Obviously, the company's embroiled in a financial accounting scandal, which makes it uninvestable, but probably uninvestable for other reasons as well. That's today. Weird. Tomorrow, Qualcomm, ARM, and Mercado Libre. I'm not really bullish on either Qualcomm or ARM, though ARM has such a skinny float, it can work against you on a squeeze at any moment. But we've seen, Ben, over the last couple of weeks, some real downbeat news on some of these old semiconductor Internet of Things plays. Things like NXPI and Lattice Semiconductor last night and Cirrus Logic. So I'm really bearish on semis that are non-AI infrastructure related. So I cross those two off the list. Now, Mercado Libre reports, and this is a stock that I promoted on this program months ago. It's done pretty well. Stock's up over 30% year to date. And Ben, I believe in the cockroach theory, which says when you see one roach, either a quarterly positive surprise or negative surprise, you'll see more. And Mercado Libre, as you may recall, crushed it last quarter. And I don't expect the same magnitude of beat, but I am pretty bullish. And I do think even after the stock's up 30% year to date, that there's probably a couple $100 left upside in Mercado Libre to about $2,400 a share. And so if I didn't own the stock, would I be tempted to buy some before the print? I might, and I usually don't do that. And then we have a few others later in the week that I'm watching, not necessarily because I care about them specifically, but kind of as broader tells. Vistra, what's going on with this nuclear to the data center trade. Datadog is reporting. Arista Networks is reporting, a company that I used to like very much. I think they're going to have a good quarter. These guys are the data networking company to the AI infrastructure, hyperscaler stars. But I did sell my Arista recently, Ben. I just thought despite the fundamentals, the valuation was too much to handle. And then we also have Fortinet. Fortinet could be interesting, and the Trade Desk. So I'm going to be watching all of those for trends, but I like Mercado Libre, MELI.
Yeah, so let's just break that down. Mercado Libre is the e-commerce, Amazon giant of South America.
Yeah.
So it's not a cheap stock, right? You're looking at 41 times 25. I'm just looking at Bloomberg, so that's a consensus. and it's growing, 30 some percent. So
Yeah.
you pay for what you get type of story, and you think it's just fundamental momentum continues. Is that the
Yeah,
the
I
gist
don't
of
think
it?
we're going to have a beat like we had last quarter, but I do expect a nice upside. The company got whacked a year or so ago when Malay came into power down there in South America, but things are going well. And the thing that's interesting, Ben, about this company is it's not just e-commerce a la Amazon. They have a very nice payments processing business called Mercado Pago, which I really like, and I think it might be, for at least between my two ears, a greater driver than the rest of the business. But yeah, I'm pretty comfy with it. And of course, it's a stock that's covered by the street, but sometimes, of course, for the obvious reason, being in Uruguay, they don't get a lot of love by analysts, or not even a lot of analysts cover the name.
And it's a little bit of a show me name, like the multiple reflects the quality, and
Yeah.
if you keep on keeping on, you'll get paid, as we've seen with a lot of big companies that have done well. Let
Yeah.
me ask you another question, and if Russell, you want to chime in as well. So SMCI is Nvidia comes out and they say, hey, we're not going to do business, or we're going to defer our business with them. What do you guys make of that? And they do it the day after the quarter ends for Nvidia. Is there something there of maybe, hey, we're preempting of like something, if there's going to be any softness in the guide for Nvidia, that they could blame it on SMCI, for example? Do you guys see anything to that?
Yeah, go ahead, Russell.
Yeah, no, I think, DigiTimes ran a story yesterday that NVIDIA is reallocating GPUs from Supermicro customers to other customers. And the issue is Supermicro has huge working capital needs because they buy all the GPUs. I mean, they consumed $2.8 billion last year. And so it's like an $800 million a quarter working capital need. And if you don't have audited financials, it's really hard to borrow money, right? Because no one knows what you are. So NVIDIA is going to scramble and give those orders to someone else. I think the demand is still off the charts. So I think they'll be able to reallocate it. But, Supermicro, with their update, they won't be able to say anything. They lost Ernst & Young, so they won't be able to get an audited number done. And so this company will get delisted, which is going to further cause the backlog to collapse. So the estimate for next year, they won't be able to say anything. They have no visibility. So I think this is just a train wreck.
I'm kind of surprised that they're even having an update at all. Originally, it was scheduled for tomorrow, November 6th. They pulled it forward, obviously to hide in the bushes during election day. But why would they even have a conversation with analysts? I don't get it.
Right. Well, it's going to be an update that's not an update, right? It's going to be like, well, this is what's happened. They're not going to tell you anything. And if you're looking for comfort, you're not going to get it. They can't say anything. Every time I've seen companies in this situation, they don't tell you anything. So
what is obviously SMCI has been a fantastic short. It was a good long in the beginning. I mean, what's the optionality value? Like, if the numbers are real, it's a cheap stock, right here. If the numbers are fake, is it a $5 or is it a $0? What do you guys think about the risk reward on?
Well,
I see this chart and it's completely.
Yeah,
is there any impetus to maybe play it on the long side?
Yeah, well, I think there may be, but the problem is I got to see at least a balance sheet, Ben, right? A audited balance sheet, so I could maybe say, okay, this is some multiple of tangible book on a worst case scenario basis. But how can you do that without any of the major financial statements, either past, present, or future?
Right. I mean, I guess I'm just trying to phrase it like a binary option, right? So I've made a lot of money over the years buying delisted stocks. Jamba Juice was one, did well. This NESR, which is a oil services company. And so, everybody doesn't want to be involved in a delisted company. And so you get paid for taking on that uncertainty. Yeah. And so I'm just wondering, what is the upside if they get a stamp of approval?
And you're way too early. It hasn't been delisted yet. I think we still have a couple, trap doors to fall through. They're going to get delisted. They can't get their numbers done, and then we get to think about what options are. Remember, Taiwan Semi is saying that. Foxconn is saying if they buy NVIDIA GPUs and put them in a box, it's a 7% gross margin business and a 2%, operating margin business, right? And so doing a market multiple on that gets you to 250. So, or I'm sorry, 20, I guess, let's see, gets you to, $25, which is where we are right now. So assuming there's no disruption to the business, you'd be there, but we don't know what business they're losing right now. So that's the hard part.
But yeah, Ben, when it all goes down, let's talk about it again.
Yeah, I mean, just, I'm a contrarian, and so, I didn't like this name when it was up there, and it looked like it was going to break down, but now it's like, no one can say enough bad things about these guys. Everyone's throwing them under the bus, so I'm just thinking, like, is there a point here where you take a flyer, maybe? But anyway, all right, go ahead.
Said not yet.
Okay. All right, let's move on. Russell, what do you got for us today? You got Centrus Energy, a nice low volatility stock.
Yeah, no, last week I had called this out as a uranium play to avoid on the long side or possibly short if you wanted to. This is a uranium enrichment company that doesn't enrich uranium. They've been importing Russian uranium. They have a slight extension to do that. But the whole bet here is they're going to get a bunch of money from the government. They need billions. They just announced they were doing an offering, and that's why the stock, just took this, 30% tumble. And they're clever because they know they can't sell stock, and so they did a convertible deal, selling it to the ARB guys who are taking advantage of the volatility in the stock. I still think this is an avoid. The stock's now 75. We were talking about last week, 90, 100. I don't know. It was so jumpy, but still avoid that. But the real news of the day is talking about HIMSS, right? David and I have had a long-going, healthy debate about this. He likes the numbers. The numbers as we saw them, I thought they were going to beat. They beat more than I thought. So they beat my estimate. But my beef here is how much of their business is coming from compounded GLP-1 medications. And the conference call was a circus of let's hide the number everyone wants to talk about. They did whatever they could to not tell you what the GLP number is. They're saying, well, our non-GLP base grew 40% year over year. Okay, so when I play with the numbers, I think the GLP business is about like 75 to 85 million bucks. Okay, so how do we get there? So if we look at the installed base, the customer base of 2 million subscribers, and you say that the men are paying $52 a month, and they gave us women at 400,000, and let's assume they're paying $75 a month. Most of that's weight loss and medications. And you give them their 50,000 GLP only customers at $225 a month, right? Then when you do that, suddenly there's an extra $42 million of GLP revenue that must come from existing customers buying GLP-1 medications. So this is and so if you take that number of 42 million, right, and assume that has a 40 to 50% contribution margin to it that's dropping to the bottom line, is that if you take selling of GLP-1s to existing customers, take that gross profit or take that operating profit out of the number, that sequentially EBITDA went down. Now, why is this important? It's important because the FDA is meeting in court on November 21st to say that the GLP-1s are off the shortage list. You go to the FDA website right now, and all the doses of tirzepatide and semaglutide are all are off the shortage list. And so we're just waiting for this to happen. I've been talking to a former FDA guy, and he says what the FDA is doing right now is they're talking to Lilly. They're getting all their production schedules, all of their lots, looking at all their capacity to say that this product is going to be adequately supplied, and it'll be removed off the shortage list. November 21st, they'll have 60 days to comply. And so I don't see how you can buy HIMSS and own the stock with this much business tied to GLP-1s. It's unless they're going to give us a number and explain it to us. But if they're going to play hide the number, you got to avoid this stock.
So make me understand, and the listeners understand, is that mean that because the only reason they can sell it is because they're on the shortage list now, and then they won't be able to sell it if there's not on the shortage list?
That's right. Now, management's saying, well, we can do personalized doses and there's ways to get through another loophole. But, most intelligent people are saying that no, once this is off the shortage list, the FDA will go after you, and you know, Novo Nordisk will bury you with lawsuits if you're still in the market. So I think it's going to be really hard to stay on the market. They seem to be making a path that they'll say we're going to compound liraglutide, which has had terrible compliance, and the results aren't that great. So maybe they're planning on getting everyone on the current GLP-1s and moving to liraglutide. But we'll see about that strategy. But there's just so much we don't know here, and they could break it out and tell us that this is the core business, but they're not doing that. So,
right. So what is the how many years are left on that patent, by the way, until like all generic guys can get involved?
We still have like a decade. That's a long ways to go.
Okay. So it's a long time. All right. So
they will make liraglutide, but on the other ones, it's going to be a long time.
And so what's the value of Hims X that? If you're like, hey, what's the value of like Viagra and Cialis and hair and skin and all the other stuff they sell? Like what's the value of that business?
I mean, this is going to be the debate going on, right? It's I'm trying to read through numbers to see what the business is, and other people are trying to read through the numbers to see what it is, right? But if the EBITDA is rolling over right now, then it's a lot lower than it is today. But it's like we can compare number exercises, right? But if the rest of the business is starting to mature and roll over, that's a huge problem.
Right. So they do 400 million of revenue, and you're saying your number is 80.
No, I'm saying 400 million, but you got to take out 75 to 80 million of it, or 60 to 80, somewhere in that range. And so, but if you look at the EBITDA and you take that out, it went down sequentially.
But could that just be marketing, or what was the driver of that EBITDA going down? Because revenues were up 40%.
Right, but that's what I'm explaining to you, right? Is that they had, if you look at the numbers and you assume that they had $40 million of GLP-1s with no incremental marketing costs because it was sold to their existing customers, that dropped right to the bottom line, right?
Right. So I guess my point is you're short the stock. Where's the stock going if this happens? Like that's more of what I'm saying.
I think this is a sub $10 stock. I mean, I think this is going a lot lower.
Okay. All right. Well, you have been very public on our chat with our friend David Maris about it.
I guess entertainment. He should be here.
I have no dog in the fight, but I've enjoyed watching you two spar. So all right, let's move on. Let's move on to our banking analyst who's going to talk about some weed stocks. Charlie, what do you got, buddy?
So listen, since it's election day, I'd be remiss if I didn't at least mention what the bank stocks have been doing coming into today. And I just want to point out the bank stocks during the month of October were up 5.5% on average. And I'm talking about the large caps. And the market was down 1% during October. So they've significantly outperformed by multiples. And they're now trading at 55% of the market multiple, which is honestly historically where they top out, and on a relative basis. And the reason the bank stocks have done so well is because of the belief that they're going to get revalued upwards as regulators are pushed back through, there's a deregulation movement that will occur under Trump. And so it really is a binary Trump trade. And, you just have to be careful, in terms of what happens tonight. I think the better play is probably the credit card stocks, because if Trump does win, the CFPB is going to get dismantled. And they have been all over the credit card company. So there's much more upward, returns in the credit card stocks if Trump gets elected, more so, I think, than the bank stocks. Anyway, I just thought that was important to point out the relative position coming into today. The trade that I want to reiterate that I pitched a week or so ago is the cannabis trade. And I'm long two ETS, MSOS, and TOKE, TOKE. Our resident technical guru, Kevin Baker, likes TOKE as long as it holds 6. MSOS has got more of the domestic play, which is really what you want. But here are the multiple ways that you could possibly win owning these stocks going into the election. The simplest and biggest upside is if Harris wins, because she has campaigned on legalizing marijuana. So that's your biggest pure play. But then there's also a referendum down in Florida, Amendment number 3, which would legalize recreational use of marijuana. Interestingly, Trump has endorsed that amendment, but Governor DeSantis has lobbied heavily against it. It's a high hurdle. You need a 60% majority vote to get that amendment passed. The polls down there have been running around 60% for legalizing recreational use. That poll has been as high as 67% in past months. So there's a good chance that the amendment passes, but it's not a sure thing since the polling shows it right at 60% right now. But if it is legalized, True Leave is your pure play down there. They're the biggest in Florida. And then if Trump wins tonight, it's possible these stocks trade off 5-10%. They've been depressed. They had a pop yesterday, and they're under pressure again today. But there is some downside risk if Trump wins. The other reason I like it is starting in early December, there's going to be some administrative law hearings where the DEA is going to present their case for decriminalizing, or I should say rescheduling or descheduling cannabis from a level 1 drug to a level 3 drug. That essentially would decriminalize that drug. The important factor there is under the IRS code 280E, if you're an illegal drug, you can't deduct a lot of your standard costs. And so if it is decriminalized and is rated as a Schedule 3 drug, there's a whole host of deductions that these cannabis companies are going to be able to take, and that's going to dramatically improve their cash flow and earnings. So that's the big play is obviously getting the DEA to decriminalize it. So I like the numerous ways you can win as I look out over the next month and a half. There are some more conservative ways of playing it. You can buy Scott's Miracle Grow, which has been at a 52-week high. They report earnings tomorrow. They're supposed to be fairly good. A little more esoteric way is to buy Constellation Brands, which years ago bought a big stake in Canopy Growth. That didn't work out. They had to write down that stake by over $1 billion. But if cannabis is legalized, that stake could improve in value. Now they have tried to they've restructured that investment to sort of signal that they're not going to go forward with buying out Canopy Growth, but they've freed up the shares to be sold. So there's a potential gain and to be had there. So different ways of playing it.
Yeah. So I guess when you think about it, it's like I've never really liked that industry. It seems too easy to bring supply on, and every strain's a little different. So it reminds me more of wine than it does spirits. But I understand what you're saying is like there is a big market opportunity, and they're treated like criminals, and so they can't really run a business correctly. So that's where a big source of the re-rating is by itself. Like, hey, I can get a bank account. I don't have a vault of cash. Hey, I can deduct my expenses. Hey, like we can get within the system, and maybe does it accelerate demand? Because I feel like those things are available pretty much everywhere, right? Is it more just on the actual systematic side of this?
Well,
or is it sentiment? Does people just get excited?
The recreational use would improve the demand, but you're right. It's the cash flow and the earnings from the decriminalization effect.
Look who showed up!
Wow, he heard that we have special guest David Maris. He heard somewhere in New Jersey, Russell talking about him.
His retort.
A parking lot or something. Wow.
Listen, no, it's my backyard, but it looks like a parking lot. So listen, I was listening in. How much
GLP do you think they did, David? How much was GLP in the quarter?
Dude, you said 1721, that it would be lower than 1721 when they reported, and then you said, I guess he won for now. Let's put a pin in it. I didn't just win for now. I won. That was the bet. So I won. Totally. So let's just shut that down. 17 to 22, that's a career call if you put enough money into it. But if you're day trading, I get it. It's all the same to you. But let's just stop for a second, because you said it's $65 to $85 million in the quarter. I did the math on the tweet on the chat last night. They did four percentage points were GLP-1s of their total. 1.4 million. Hold on, no. Let me just do the math. 1.4 million times times 4 percentage points gets you to like 57,000. 57,000 times, if we say 200, 299, whatever you want to use per month. And that's assuming they had all of those for the full month, for the full quarter. Not even that they came in at any point. They came in day one. That doesn't get you nearly close to that number. So you can say it's 65, 80 million dollars. It's more like 45 million dollars. And they beat what EPS number did you have? They beat that. What revenue number did they beat? They beat that. They beat your subscription number, I'm sure. And then when someone asks you how much is it worth otherwise, you're like, oh, I don't know, $10 sounds like a round number. I'll go with that. We owe people more than that. They're growing 40% subscriptions, 40% without GLP-1s. Okay, give me, I asked you last night, give me another subscription-based thing where the subscription's a couple $100 a month, where somebody's where it's growing 40% on 2 million people.
Go ahead.
Another subscription. Oh, you caught me off flat-footed. I guess you're right. No, but I'm saying if you look at this, if you look at it sequentially.
What was wrong? Okay, I'll ask you a different question. What was wrong with my math that I did?
No, when they explained, they just said 40% growth in people and existing customers. They didn't talk about how many of their existing customers are also GLP-1 customers. There's overlap, right?
No. There's no overlap because they only started in the quarter.
No. There are.
But I'm just asking you, what's wrong with my math?
I think you're not counting the number of people who are existing customers who are also taking GLP-1s.
So this is where people really have to be into the details to know where you're wrong and where either you're wrong or you're misleading. I don't know which it is, but okay. They also said that
why don't they just tell us the number? Why don't
okay, but they also said, and you remember they said this. Check the transcript. That only some portion of the people on GLP-1s are starting at the regular dose, whatever, that are paying full freight, all the rest. But they also get a whole bunch of people, weight loss people, that aren't on GLP-1s. In fact, that's the majority of their folks. So are those people all of a sudden when they stop the weight loss of the GLP-1s, they're just going to go away?
No, David, they said they have oral weight loss at $100 million run rate. That's $25 million in revenue in the quarter, right? That's what they said. $100 million run rate on oral medications, oral weight loss. 100 million, so 25.
So you're saying of the 45 million that I calculate, there's double amount of people that were somehow mysteriously on GLP-1s before they ordered them, before they offered them. They somehow got it black market. Like what did they do? No. They have like friends and family before they announced it.
No, I'm saying.
And what about that average that I said? Like people probably came in through the quarter on a linear basis. That doesn't count either.
Why don't they just give us a number? That would be very easy.
Of course, they don't give you the number. Amazon doesn't give you the average order number, do they?
But to be fair, Apple removed the orders years ago.
I can't hear you, Ben.
No, I was just saying, I remember when Apple removed the orders. Paul, you probably remember that. And people were like, oh, why? Because the iPhones are slowing. Well, you know what? Buffett bought it around then. It's been a dominant stock. So I don't think them taking away, even though I would have rather have all the data. I'm with you on that, Russell. But it's not unprecedented that means that it's.
I totally agree. For a controversial stock like this, if I were the last thing I would do is start to tweak with like what I disclose. I'd give more. But that said, Amazon doesn't tell you what their average order is, right?
Okay, so this should be. We can make it. I mean, every time we usually see these companies pulling metrics on a smaller companies.
Every time. Yes, every time for a small cap telemedicine company, it's bad news. But every time they do it for a tech company, it's okay and it's amazing. Like you can't just make up like every time a company does this, it's bad news. It's not. Again, I prefer having more data than not, but it doesn't mean anything.
Yeah. Well, let's see what happens on.
I must put it this way. I agree. Look, I know the bad stuff here. I agree that GLP-1s, that's a risk factor. I agree. Steadily insider selling, I don't like. I think the board's actually really great. I think they have a lot of verticals. I think anything growing 40% that's trading at maybe 20 times, maybe 30 times next year's number is pretty amazing. That's a good price.
Yeah,
You're not okay with that. I just don't like making up. I don't like making up numbers that you're right. They didn't disclose, but mathematically you can't get to.
I'm just saying, David. But
let me stop you guys for a second. What's the bracket on this? We look out. Everyone's listening to you guys, and it's fun. But like, let's just put it in numbers. We get 12 months. What's the range of outcomes? The David's right outcome and the Russell's right outcome. And we have a $21 stock last trade. Where are we in the range of outcomes next 12 months? Go.
Okay, I say 20 to 30 plus, and the 20 I get to at $1 worth of earnings, a 20 multiple. Could I go lower if something really bad happened? Maybe, but I think you're at $1 earnings no matter what next year. And I think that 30 plus could be, first, I still think private equity, if I were the company, I would be like, you know what, I don't need all this trouble all the time, quarter to quarter. I'm going to build this out better. If I'm a drug company or a distributor, I'm thinking, wow, this is a platform that I have customers that are loyal, that I can sell other stuff to. That said, I still think at 30 times, it would be an attractive price on $1.
Okay, and Russell, what do you see your range of outcomes?
So you're saying 30 times $1. You're saying a $30 stock.
That is the math.
And he's saying the downside is 20. So if I'm risking $1 to make 9.
And I'm saying, okay, if we look at this, and if we say, if I'm right, the way I'm looking at it, that EBITDA actually went down. If we back out the GLP-1s, and so if I would say if that EBITDA is at really like a $25 to $30 million run rate right now, 108, we'll grow that at 40%. That's 151 EBITDA at a 20 multiple. That's $3 billion. So that's still down. And what is it right now? $5 billion. So that's down 40% from here.
Okay, so $12.
10 to $12.
All right. So if you do the overlapping distributions, we have a $12 on the negative side, $30 on the positive side, and not ironically, we are at a $21 stock. So this remains a controversial stock, both on Wall Street Beats as well as in the marketplace. Guys, one last question, since it's the election day. Who's everyone got? Who's winning? Not who you voted for. Who do you think's going to win? Go around. How about you first, Charlie?
Yeah, Charlie.
I think you're muted.
Maybe he's muted on purpose.
How long you go? Go ahead.
I've already voted. I voted for Harris, but I think Trump's going to win it.
All right, David, who you got?
I don't know. I mean, I'm following it as everyone else is. As you say that, there's a black crow that's flying above me. I'm nervous about what to say. So I'm gonna go that we won't know for days, and I think that I hope Trump wins.
You're right. You're doing the Super Bowl safety bet. Okay. And what do you got, Russell?
I kind of agree with David on this. I don't know, and I think it's going to be contested.
I do too.
And I can overlay this to run this off is that if you look at what's going on in the options market, one of the biggest trades, and Goldman put something out about this yesterday, is selling VIX puts, volatility puts, is the new SPX call. And there's a lot of built up, and the idea is right now implied volatility is at basically double of realized volatility. It's not at the level of richness that it was, for example, in July before the carry crash, but it's rich. And so if we have an uncontested, we get a result, the volatility should come in, and there should be some level of bid to that. But the scenario that's actually the sneakiest for the market is the scenario where we have a contested election and it drags on. Well, then now everybody's stuck in these things. Vol goes up. Guys may have to sell assets. And I can only direct you to looking at the 2000 election and how markets traded post-election all the way into December, where we had 6 weeks or whatever it was, where Gore and Bush were going after it. So if the tie guys are right, that's actually the worst case scenario of all scenarios for the short term, not necessarily the long term, but the short term. So,
Ben,
hey, I had one other thing to add there, Ben.
Your biggest return come from
wait, Charlie, you freezed on us. Who do you got? Who's your call? Because we cut you out.
I'm calling for Harris in a surprise, but it's more from a stock market point of view. I think that's where your biggest returns are going to come from. In other words, the Trump trade has been on since the summer, and that's widely anticipated. So if Harris wins, there are huge moves that are going to be made in not only the general indices, but in individual stocks. And so that's what I'm betting on.
Yeah, but Charlie, you're very biased because you're a big P. Diddy white party guy. So we know that you've been there. So I don't know.
All right, so the theme of the show can be summed up as this: we got a couple of Harris, a couple of Trump, got a bull and a bear on Hims. There's a lot of uncertainty. Come visit us tomorrow. We'll talk more about it and see where it all shakes out. Thanks, guys. Thanks, David, for jumping in. That was fun.
Yeah, thank you.
Good job, everybody.
See you guys.
Good show, guys. Good show.